Thank you. It's a pleasure.
All right. Outside our shores, Asian stocks and U.S. futures rose today after the Federal Reserve's downplayed risk of an interest rate hike, while the yuan was bumpy after another burst of suspected interventions from Japan. S&P 500 futures rose 0.5%, pointing to a cash market recouping a late slide on Wall Street. MSCI's broadest index of Asian Pacific shares outside Japan climbed 0.6%, led by a 2% surge in Hong Kong. Tokyo's Nikkei was flat, Treasuries rallied, pushing yields lower, as the Fed also said it would slow down its balance sheet runoff. 10-year Treasury yields rose 3.3 basis points to 4.62% in Tokyo, having fallen 9.3 basis points in New York. The dollar was last up about 1% to 156 yuan, and the euro was up 1% at 167.19 yuan, and Aussie was trading near 102 to the yuan. The United States Federal Reserve held interest rates steady and signaled it is still leaning towards reduction in borrowing costs, but put a red flag on inflation readings. Fed's Chair Jerome Powell says it will take longer than previously expected for policymakers to become comfortable that inflation will resume the decline towards 2%. That has shared them through much of last year. Federal Chair added that rate increases remain unlikely, but stage has been set for an extended hold of the benchmark policy rate in the 5.25% to 5.50% range that has been up in place since July. Central bankers believe the current policy rate has put in pressure on economic activities to bring inflation under control. Latest reports from Hong Kong's monetary authority shows that the country kept its base rate changed through the discount window unchanged at 5.75%. The report also reveals that high interest rate environment may last for some time, adding that the Fed has not yet gained enough confidence about the U.S. inflation trajectory to start cutting interest rates. The dollar exchange rate remains stable, while interbank rates might remain high for some time. HSBC Holdings said it kept its best lending rates in Hong Kong unchanged at 5.875%. Crude oil prices rose today, rebounding from 3 days of losses on expectations that the lower levels may prompt the United States, the world's biggest crude consumer, to start replenishing its strategic reserve, putting a floor under prices. U.S. West Texas Intermediate crude rose to sell at $79.78 per barrel, with an uptick of 0.99%. Brent also experienced an upward price review of 1.05% to sell at $84.32. And Bonnie Light recorded a downward price margin of 2.95% to sell at $85.43 per barrel. And for the OPEC basket, dealers are offering $88.72. That's our show today. Thank you so much for being a part of it. I'll see you tomorrow, same time. Get busy, make some cash.